Welcome to the end of Module 4. So now that you know some of the most common trading strategies, we can kind of decipher which one's going to be best for your lifestyle. You can try them all out, see what works best for you, but I think that they all fit particular lifestyles if you give them all a try. So day trading, I think that strategy is definitely best for anyone who has a lot of time to analyze news and monitor trade opportunities. This strategy is also going to be best for any sort of maybe more impatient investor looking for short-term profits, which also, as you know, will carry higher risk. I believe this trading strategy can also feel like gambling at times, but it is the best way to monitor price action since you're right there on top of the ticker symbol. Swing trading, this strategy is for investors that don't want to look at their investments too often, but have enough time to play on large catalysts, maybe like partnerships or news, things that might induce some price action. I believe that swing trading also requires some mental equity. Investors await their price target, so you're going to have to stay apathetic with the market. And I personally enjoy this trading strategy the most because you can really assess your risk and actively draw your trend lines, support and resistance, and make easy decisions that way. Then there's the volume trading that we spoke about, and I believe this method is best used along with day trading. It can also be used for swing trading as well. You just have to make sure that whatever time frame you're trading on, you stick to that time frame. If you're usually trading on a day time frame, or maybe your outlook for your trade is a longer term swing trade 2 weeks out, okay, then you should be looking at daily candles only or weekly candles, but stick to whatever candles you're looking at, and that goes for the volume bars as well. This can be used pretty good along with day trading, as you can predict the movement of the market based on the volume. This investor would be trading on catalysts that presumably bring in high volume, and then it would induce predetermined direction due to whether it's a positive or negative. I view the volume trading investor as someone who trades on catalysts that presumably bring in high volume in a predetermined direction based on a positive or negative catalyst. After hours trading, I don't think anyone should be trading solely, but I do think that it brings quite the opportunity in some cases due to the gaps in candlesticks and the lack of volume on the chart. To speculate on what type of investor might trade strictly after hours, this could be a combination of all or none of the following strategies, but it could be a quick trade or not so quick. This trading style requires limit orders only. I would only trade after hours strictly if I knew of an upcoming catalyst for that day, or if I wanted to be in early on something I saw an increase in volume due to some form of catalyst, such as news or a partnership. I'm sure you're wondering what works for me, and I figured I would share that with you guys. I have tried all of these trading strategies, and to be honest, I find enjoyment in all of them. But I like to stay prime in one area, and you should really focus and hone in on the skills that you're good at. So the trading strategy that I have found myself using the most is swing trading. I typically go short or long in a position, and I stay up to date on news, as well as being active in the space regarding my security and its sector. Essentially, I just sit back and enjoy the ride, and I really like my hands-free approach about it. If you want to read more about the trading strategies that I choose, you can read that in the document that I've included for you, and I will see you guys in Module 5.